Hey, everybody, and welcome to Market Psychology 101, where we try to be cautious when there's too much greed and to look for value when there's fear. If you like anything I have to say today, please consider liking, subscribing, and comment below. Is there a stock or crypto that you would like for me to take a technical look at? So, we are starting today's video with the yield curve. And right here, I have the US 30 year minus the US 2 year. Now, if you're new to this channel, I want to help this channel grow a community for the casual, low to medium risk investor. If you are someone who rightfully so would be consulting a financial advisor first, you put more of your money away into money markets, into a Roth IRA, which all that's fantastic. But let's say you're looking to invest a little bit more on the side and you just want to know how to find more value in the markets, or maybe are trying to get a sense of what to expect next. I want to make this channel educational, helpful to you guys. So when you do go on some sites like tradingview.com, that you do have a sense of what to look for from a macroscopic perspective. This isn't really a channel for trading, calls, puts, leverage, all that stuff. I want this to be for the macroscopic investor who's just trying to increase value. So why does the yield curve matter? You've probably heard about the yield curve and how it is recently inverted. The reason that matters is anytime it goes from being inverted or under 0% to uninverted and going back up, usually there's a recession that follows. Now, it depends on when that takes place. So 2008, that was the great financial crisis after the yield curve was inverted. Of course, the dot-com bubble after the yield curve was inverted. Here in the 90s, you could say that was a soft landing. Now, again, we're measuring the 30 year minus the 2 year. One of the more common yield curves, and before I go to the next one, this has just uninverted, which is something to note. So maybe that's going to happen for one of the more common yield curves, which is 10 year minus 2 year. Now, excuse me, as you guys know, I've been fighting off a cold lately and a cough. I have a line at the 0 mark. We are still looking to uninvert on this yield curve. Now, you can notice that this one's very similar. Again, great financial crisis followed that inversion of the yields. So how does this work, you might ask? Well, basically, most of the time, I'm going to try to simplify this as much as possible. Most of the time, when the Fed comes out with rates, you know how you get a house right now and the rates are really high on a mortgage. Okay, they raise rates to fight off things like inflation and other sorts of stuff. Now, when rates are lowered, that's usually when the yield curve uninverts. So people are expecting rates to be lowered as we go on. There's more to it than that. I'm really dumbing it down, simplifying it here. Here we have 2020. We barely got under it. And then, of course, rates were lowered. We printed money. The markets boomed. And as there's a lot of inflation, we raised rates and inverted the yield curve. So this people have used, and it's got a pretty good track record that most of the time when we uninvert, that sometime after we do go into a recession. That does not mean that markets can't run up for the medium term. Here is a look at the S&P 500 since the dot-com bubble crash. Okay, let's measure these out. This was about a 50% crash. And then the great financial crisis is about a 57% crash. This was the COVID crash, a 35% correction. And most recently, we did get somewhere around a 28% correction in the S&P. Now, as you notice, I just draw these trend lines, and guys, trend lines are only good for as long as they're good for. We have this trend line here, which sometimes it's got close to bouncing off of, but then it has bounced off of, gone through it, bounced off of it. We've been honoring this trend line again. And below, as you can see, this ascending trend line, and this is on a log scale, is we've only touched it twice, and that was the COVID crash and the great financial crisis. So my thought is, if we were to get a recession, and if I don't know when it will happen or if it's going to happen within the next year or so. But if this trend line is an area where I will be strongly consider buying more, or at least looking at the stocks I like and putting more money into it, or putting in a larger chunk of money into an IRA during that time. So maybe we only come down to this falling trend line here and bounce up, get over that 5,000 level, which a lot of people expect with the S&P. Maybe we go down here. Guys, I don't want to get too much into the bear bull thing and predictions, because when you make predictions, it's a good way to look stupid on YouTube when you're just going off of what's happened in the past. However, with the yield curve uninverting, it does have a pretty good track record. So odds are within the next couple of years, we could see a recession. Usually, on average, I have to take this off log. Once this yield curve breaks the uninversion, on average, it's about 7 months. No. Let me backtrack. After we uninvert, I want to say it's about 6 months until a recession is called. But there's other indicators too. I believe it's when rates are cut after the first rate cut. On average, it can take 7 months till a recession. It can take as long as 2 years, which I believe is what happened in the great financial crisis. I'd have to go back and check, but look for the first time it uninverts, look for the first rate cut, and start the timer. We don't know if it's going to happen a month after or 24 months after. So just something to be mindful of. The VIX, this is the volatility of the markets. And as you can see here, it's still saying it's pretty low, not super volatile. When the VIX is spiking, that tends to be the greatest times to buy when markets are very low. So do watch for the VIX to be above the 30 level, the 35, 40. Higher it gets, the better the buying opportunity. But again, it depends on stocks. They all go down at different times and at different depths. If you take the volatility and divide it by the VVIX, which is the volatility of the VIX, something that emerges if you do it this way, VIX first, is that every time we peak down here or bottom, that tends to be a local top in the market. Usually, sort of lines up. When we're spiking up here, these tend to correlate with bottoms in the market. So just another indicator you can look for. We haven't talked about unemployment rates in a while. Unemployment went down. We had COVID, got back down to these levels, and it's been curling up. Usually unemployment starts to spike during the recession. So just something to keep an eye on. Dow Jones, really, I mean, it's all kind of the same. Right? It's making an all-time high, getting further into it. I like to look at the S&P for most things, so I just go off of that. Fear and greed. I talk about fear and greed a lot with this channel. Let's refresh this, make sure we're current. Sorry if any weird advertisements come up. You guys know that on this channel that's been a problem. And I promise you I'm not looking at anything weird or bad. But we are in greed right now on the CNN fear and greed indicator. On the pie investing fear and greed indicator, we are still in extreme greed, which to me makes sense because we are in all-time high territory. However, we might start to come down because maybe people are feeling not as confident into a new bull run. And that makes sense because when we do have a crash and after we have lowered rates because the economy is hurting, it makes sense for a new, more powerful bull run to come after that. Okay, so this bull run has started without rate cuts and it has started without a massive crash. Sure, you can say here we had a correction. A lot of people talk about, how much has this priced in for a possible upcoming recession? And maybe the stocks dipping back here has helped possibly soften the landing for a future recession. We'll see. We'll see. But I will tell you, if the S&P gets down to these levels and it falls down 20, 30%, 40% or more, 50%, those will be great opportunities to buy. The news will be talking about how the sky's falling. Guys, when there's fear in the markets, that's when you want to pounce. Okay? I know it's the time where people get worried and they sell their stocks usually too late, and then they buy when things are good and exciting. We try to maximize your value here on this channel. That's what I'm trying to promote, so you can get more out of a stock. Let's just take a look real quick at Apple. I'll show you a great example of this. So if we zoom way out, go to the 5 year, and we go way, way, way back to the great financial crisis. Apple, from the peak to the bottom during the great financial crisis, dipped 61%. And you could have bought Apple stock for around $3. And right now, I mean, look at that. It's 65 times higher. So $1,000 into the market times 65. You would have had $65,000 within 15 years of your investment if you decided to hold. $10,000 would have turned into $650,000. And I know it's hard to buy the exact bottoms. Maybe you bought it at $4, $5. Who cares? But this is why I say we look for opportunity when there's fear in the market. When things are feeling great, everyone's happy, hunky-dory, that's up here. And then you check your stocks and you feel like an idiot, you feel like you wasted your time, and then you don't put in money when it's down here because you're feeling dumb about it. We're trying to promote the opposite here. Let's take a quick look at earnings. So here, I'm just on NASDAQ.com, and we have some important earnings this week. I want to take a look at some of the larger market cap stocks. So we have Johnson & Johnson, J&J. Let's take a look at what that is doing. Do some quick technical analysis. When I start off looking at a stock, I look at the last year. Where is it? We're kind of here in the middle. I'll zoom out a little bit, see how far down we are from the all-time high. I do this especially with stocks that I like, that I use. That's a couple rules of my investing strategy. In order for me to buy a stock personally, I want to use the stock and I want to like it. Johnson & Johnson, I use it. Do I like it? Sure. I don't really feel strongly one way or the other, but it's down 15%. We know that after COVID. I mean, look at this, how much it ran up with all the vaccine stuff. Okay. No, I don't want to get into all the politics of that, but let's say Johnson & Johnson's something you like. Maybe you consider buying here because it's in the middle. Well, let's take a look at a couple things. The RSI, the Relative Strength Index, on the daily, this is the D right there, it's at above 50. We have better opportunities to buy when it's below 50. Now, RSI does not always correlate to price. Things can be overbought right here at a much higher price than other times it's overbought and at a much lower price. But this is just kind of helping us see where the trend's going. Right now, as you can see, we're still in an upward trend. So would I buy Johnson & Johnson here? Me personally, no. But do your own research. And if you really like the stock, you use it, then maybe. Now, when we go to the weekly, I have an indicator on, and you can search up different indicators. And here are some of mine. If you are looking for an indicator, you can just type in a word. Like if you're looking for bubble indicators, there are some out there. This is one that I use, but you can just type in bubble and see what it shows and play around on tradingview.com. On the weekly, the last indicator we got was this green buy signal down here. And so it has ran up about 11%. If I were to draw a fib, and I'm just showing you guys like some basic things I do here. If I'm going to draw a fib, and this, by the way, you'll see people draw a lot of fibs on technical analysis charts, and I do not claim to be anywhere near as good as true TA technical analysis people who are out there. But something that happens a lot is prices will bounce off the fibs from the previous low to the high. So right here, we got over the 0.5, came back down, tested it, and then shot back down to the 618. So it's still bullish. Now, if Johnson & Johnson went below that, got down to here, I'd say maybe it's possible that we go down to 144. But if you really liked it, why not buy it at 151? Earnings, tomorrow we have a big one. and that is Tesla. Now, for those of you who have seen some of my other videos, here's some of my issues with Tesla. Something that you need to educate yourself on if you haven't already, and that's market cap. So here's a way I can explain it. If let's just pretend Tesla had a market cap of 1 trillion. Okay, I know it says 665 billion, but let's pretend Tesla, for this mathematical purpose, had a market cap of 1 trillion. And that means if you invested 1,000 into Tesla when its market cap is 1 trillion, in order for your 1,000 to turn into 2,000, its market cap would have to double to 2 trillion. Okay? Now Tesla's market cap is at 665. It's been at around 800 and higher before. One of the reasons, me personally, I do not use Tesla. Do I like some things about them? Sure. But one reason I don't like Tesla, it's nothing to do with Elon Musk. It's that their revenue is half of Ford's. And Ford stock is about 15 to 20 times less. Ford stock is at around, I want to say 40 billion. It's pretty close to there. And so half the revenue, 15, 20 times higher. I know it's a Magnificent Seven stock, but I think if we are to get a recession sometime soon, I'd be looking at Tesla to possibly be the Mag 7 stock that suffers the most. I click the 5-year because it puts us on the weekly time frame. You could just change that from daily to weekly if you wanted. I'm just trying to educate you guys how to use TradingView a little bit. We had a sell signal recently. It's played out a bit, and you can see right here we're at the 618. So right now, maybe it would come back up. Sell signals had time to play out. We're at an important level here, so we'll see. Earnings is tomorrow. If earnings is good, sure, you can take a gamble. I do not encourage gambling, but if you really like Tesla a lot, use it. Hey, this is not a bad opportunity to buy. I mean, look at this. How high or how far have we fallen? 31%. If you believe in Tesla, you really like their stuff, you use it, they're down 31%. Hey, if Amazon was down 31%, I'd be buying Amazon. So let's move on from Tesla, see if there's any other large caps that we should look at. We have Visa and we have American Express. Let's take a look at Visa quick, and then we'll get into a crypto overlook. Visa, here we go, V. So this is where I start. This is me personally, just one way I look at things. We've gone up a lot, and right now we are at a yearly high. So I would not be buying a stock that is at a yearly high and an all-time high. I like to buy things when there's fear in it, when it's oversold on the relative strength index, the RSI. I've told you guys this before. Time in the market is more important than timing the market. And we may never get back down to these levels. True. But if we go back and just look, I mean, you don't have to go back far. Look at this. You could have bought Visa when it was at yearly lows and oversold down here. And I like when things are double oversold, especially on the daily. Now, if we go to the weekly, so you click D, go to 1 week. What's the most recent signal we've got? Sorry, I went back a bit far. The most recent signal we got was a buy signal. It does look like it's had time to play out. It's gone up, again, to yearly highs, all-time highs. It's gone up about 18%. Pretty strong move. I would look to see when a weekly sell signal happens. Let's go over to Bitcoin. We got back over 40,000 today. I know it got down into the 38,000. So this is on, I just clicked 5 days down here. As you can see, now look at the ticker over to the right, 38,500. And then it bounced and it's gotten back up over 40. 40, important psychological level. We'll see what happens with that. But something I've noted, and you can go back into my channel, look for the video. I talked about how when we get this weekly sell signal on the weekly, and this indicator is a 1020 MA, that's moving average, crossover with Heikin-Ashi signals, on average, over the last 4 years, I think there's one case where it didn't happen. Bitcoin, and this is if we start with the sell signal, usually comes down around 15%. Now, this can take a month or two, but that would put us near this fib, of the 618 near 36,000. Now, sometimes things move around here. Let me make sure my fibs are lined up as well as they can. Low to high. Okay. Sometimes I look at this stuff on my phone and it moves it around. So, yeah, 36,000. And guys, for me personally, I don't wait for the price to be at that exact point if I am thinking of buying, because we don't know. Like, let's say you were looking to sell at 48,000 and you didn't have things really set in there, and we wicked to 49,000 into the ETF, and boom, we were gone. We didn't close up there. And so even if we only wick down to this fib level of the 618, we might not close down there. That's why I might be okay buying Bitcoin or certain altcoins when they're in here. Now, macro-wise, I do think there's some bearishness here, and I do expect it to get down to that level. If things got really bad, I would expect it to get down to this 27,000 level. And one reason I've talked about this before, not that history says that things have to repeat, but this fib, look at this, from the high to the low, we wicked up to the 382 and we're under the 0.5. Here's why I bring that up. After the last 4-year cycle for Bitcoin, and what do I mean by 4-year cycle? Here's the rainbow chart. There's typically around 4 years from peak to peak to peak. Now here we had a double peak, so this one would be closer to 4 years. And this one, I believe the price was technically higher here, but that's close to 4 years. 4 years. This one was like 2.5, whatever. But at the last 4-year cycle, what happened? I drew a fib from the low to the high. And again, doesn't have to play out the same. Usually Bitcoin gets less volatile with each cycle. But we wicked up to that fib level, the 382. And anytime Bitcoin was under the 0.5 was a great time to dollar cost average in. And anytime it was under the 618, that's our 36,000 level, remember, was a great, wonderful time to get in. Now, here, this was a COVID crash. You can see down below, March 2020. We got in there briefly. So I would not recommend, me personally, waiting on the sidelines with all your money, hoping, praying for Bitcoin to once again get under the 786. I don't know if it's going to happen. If we're judging based off what happened in the last cycle, it may just flash under there quick and get out. I'm happy getting some crypto as it's between the 0.5 and the 786. Me personally, I am taking the macro perspective. I don't need to see profits for another couple of years. And if we are in this 4-year cycle where maybe we're going to top somewhere in late 2025, get somewhere around 140 to 180,000 Bitcoin, then our altcoins are going to do pretty great too. So on this channel, I like to exclusively look at altcoins that are available on Robinhood and Coinbase. So I'll be talking about those a lot. I have talked about how in my previous video, how there's some altcoins at pretty decent prices. I do like to check, what are altcoins like Link doing? Again, I take a look at the last year, still pretty high. But if Bitcoin were to sell off, heck, if crypto like Link, one I like, were to be near there, I might buy around that price. And again, with stocks, I talk about buy what you like, buy what you use. That is a great way to have insider information, because if the product starts to suck, like let's say you're going to Bed Bath & Beyond, and you notice their stores start to suck, you might start slowly tapering out of your Bed Bath & Beyond stocks, okay? Or Target. You maybe love Target, been getting Target stocks, but you notice lately the stores are just going downhill, okay? That's a good way for you to have insider info to the future of, what's the next thing. But I try to think of stocks. What is something that I use now, that I like now, that's going to be around in 30 years? Now, crypto, that's different. It's speculative, all right? So barely any of us, I would wager that probably none of us, maybe a couple of us, actually use crypto for anything other than just the exchange of money on these exchanges like Coinbase and Binance and other stuff. I'm only going to be talking about crypto available in Coinbase and Robinhood. So how many of us actually really use crypto? Not many of us. So you do have to do a heavy amount of research. There are some cryptos that I've done a decent amount of research on that look pretty decent. I have a couple fibs drawn out, the yearly fib from the high to low and a macro fib. That's why this chart looks complicated here. So I do try to find, what's a strong zone for these. And look at this, Solana on the weekly got a sell signal. How deep might that take us? Maybe it's, I would say on this macro, is at the 618. I'm just shooting from the hip here. At 103, that's when that one started. Maybe it's going to get us down to 786 around 61. And if I were to take a look within the last year, where's the 0.5? Not far away. 70. I do wonder if Solana might get down to this 57 level again. If it got between 57 and 70, heck, I like Solana. I might look into it. Fetch.ai, we all know how AI stocks have been crazy overbought. Let's take a look at it on the weekly. Had a sell signal up here. Okay, it's gone down a bit. It's wicked down under the 382, so I would expect, not that it has to happen, price to maybe get to this 0.5 area, 48. And if something like Fetch got lower, I'd look more into it. So is there anything else I want to take a look at with you guys? Crypto fear and greed. Let's refresh this. This one always says very weird. Here we go. Very weird advertisements. We have fallen below 50. Okay, this has been a first for a while. We were in extreme greed not long ago. Wow, who needs that many USB ports? Someone tell me what this is. I have no idea. It's probably a very obvious answer. Over the last year, look at this, guys. Last year, or maybe it's last month. Here we go. Last month, we're at the lowest we've ever been with fear and greed. 3 months, lowest we've ever been. 1 year, okay, a little different. We've not been here since October. Things are a bit choppy there, and that makes sense. We got slightly into extreme greed right before the ETF. It was buy the rumor, sell the news event. And we've gone down here. Are we seeing a reversal right now with Bitcoin? Maybe. I don't like to get too caught up. If seeing a chart like this, you look at the 5-day, you're like, whoa, this is a strong move up. I should be worried. Just start zooming out, and you'll see, hey, we have strong moves and then even stronger moves the other way. Or maybe you were hoping for Bitcoin to go higher and you got worried when this move happened on a smaller time frame. Look what happened over time. So just zoom out, if you will. Yeah, let's go back to crypto fear and greed. So many weird advertisements. Here, we've still been in a price uptrend, a fear and greed uptrend. Are we going to see a reversal? In the mid-cycle of the last bull run, we fell off pretty quick. Now, this took 6 months from the low to the mid-cycle top. Here, it's taken a year. So, do we only have 6 months towards the bottom? I don't know. Things don't have to play out with the same amount of time as before. It's something to consider. And again, fear bottoms don't always correlate to price bottoms. Like when we had March 2020, okay, March 2020 down here. But was that the lowest price? No. Or yes, it was down here. Now here, August 2019, that price was not as low as here. So the fear was a little bit less, but the price was lower. Do you hear what I'm saying, guys? So where was that? August of 19. It was over here after this big sell-off, somewhere around here. As you can see, COVID, we got even deeper. Alt season index, again, let's just refresh it. So we're taking a look at things. Now this is just the alt season as it is in a smaller time frame for this year. But if we take it out to the yearly, which I like to do, take a macro perspective, look at this. We're possibly coming down, chopping back up. I did note we were in a downtrend and then maybe possibly reversing back up. Bitcoin, when it sold off, went down here, and then the mid-cycle top last time was July 19. So again, this is alt season index. What other things can we look at? Total 3. I noted how on the weekly, wow, we started with the sell signal, had a buy signal, now another sell signal. So it does look like we are getting to the 20 MA. And if we got below that, I would think that maybe we're coming back down to this trend line here. But where's the 20 MA? There seems to be some strong support here. So we'll see where altcoins are. at that time. Bitcoin dominance. I've talked about this in other videos. I'll do another deep dive on it soon. Most recently, we did have a sell signal, but look at that. We had a sell signal, but then we've gone up. So are we going to get another macro move down? Who knows? And sometimes signals do this, guys. Look at this. Buy signal, into a sell signal that was then higher, went lower, and then so again, this is Bitcoin dominance. So, and I'll do a video on Bitcoin dominance coming up. Some correlations I've seen. I don't want to get too much into it right now. Let's end on Ethereum. We're here at about half an hour. Ethereum, sorry for all the fibs. We've come down a little bit. Now, this is a fib from the last year, from low to high. Looks like we're getting close to that 0.5. And it'll be interesting to see what Ethereum does. Now, total 3, that's the market cap of all the altcoins minus Bitcoin and Ethereum. You saw that one was selling down. Ethereum does look like it's going to go to the 0.5. Let's take a look at the 5-year. What's the most recent signal? We had a sell signal, and that's a strong one. So is it going to bounce off the 0.5? It might, and then come back up and down. We just had a pretty decent violent move down. But again, when we get these macro sell signals, especially on Bitcoin, that 15% correction I talked about before usually takes a month or two. So I know this is happening quickly. So if it reversed up quick, that wouldn't surprise me. I want to see what happens in a month or two. And I can be patient enough to do that. If Ethereum, you can see there's a couple different fibs down here, a lot of support. Maybe if it's back down to that 1800 level, not the worst time to buy. And over the last year, where's the RSI? It's getting oversold. Where's Bitcoin on the last year? We have yet to touch the oversold region on the daily. And so I would expect that to happen. And I'm curious where price will be, if it'll be at our 36,000 level. So that's all I have for you guys today. Hope you enjoyed this video. Again, please comment below if there's any stocks, crypto you want me to take a look at. Again, my channel, I want to help build a community to help, for all of us to help each other, educate one another on simple ways to invest, maximize our value. So you can go on TradingView once a month or twice a month and just be able, I want to show you guys quick ways that you can look to see if the stocks or cryptos you like are at good value or are they not. Is it something you like and use? Then, and you consider it, is it a yearly high or is it within 20% of a yearly low? Is it oversold? Are we high in fear? Or is it overbought and we're super high in price? So just some things to consider, and we'll get into other indicators as well. Maybe I need to make a video soon on the different indicators out there to help y'all out as well. So hope y'all are doing well, having a great week. Thank you again for watching. Of course, none of this financial advice. I'm not a financial advisor. I do use my knowledge, experience, and I have certification in the field of psychology that I have used to help me do pretty well in my stock and crypto investments. And I'm just trying to pass along some of that information to you guys because I'm an educator at heart. I like to help people. And if I can help people financially, then that's something I feel pretty good about. I don't care if this ever takes off, if I ever make money off YouTube. This is just fun for me to do for myself. And I hope some of you can benefit from it as well. So anyways, thank you guys for watching. Have a great day.